where do you think you've got a significant client base, $6 billion in assets. Where do you think the retail advisor lands on that? And then from your institutional book, where do you think the adoption rate is? Where are we in the Overton window of the acceptance of this kind of strange new, call it digital gold, if you will, in the minds of sort of broad advisors? And I'll put that out to you, Matt, as well, on sort of second.
Sure. So we're very early still. Like, I think earlier than people who are in the space or even in the financial space that are reading about it more than the average person. I don't think we truly appreciate probably how early we are. It's still very much the educational phase. And I can certainly say that for our advisors. I've written a couple white papers. I've had conversations. We were part of the 3IQ product, the Prospectus Cleared Bitcoin Fund. So we're having those conversations, but it takes time. It takes time to accept sort of a new paradigm, a new asset class. And I would say that's, in general, still where we are. There's a chart I saw on the internet yesterday. I think it was by Willy Woo, who's sort of a well-known Twitter quantitative guy, tracks some of the good crypto metrics. And he was kind of making the argument that we were still in the innovator phase and maybe just passing over into the early adopter phase. So kind of like 2.4% adoption. And, I sometimes feel like maybe we're farther along, but, truthfully, that's probably pretty accurate. We're just scratching the surface of understanding and adoption. So maybe I'll get Matt's thoughts as well here, so I don't monopolize it.
Yeah, I fully agree with that assessment. I mean, it's quite clear to me that we are certainly early days. Our focus as a firm tends to be more on the institutional side of the equation, which is, in my estimation, at least, that's basically all white space at the moment. There have been obviously some announcements relatively high profile here recently with some of the publicly listed companies allocating some portion of their balance sheet to Bitcoin. And, we've seen a couple of the endowments. There was a piece over the weekend in Forbes or Fortune about Paradigm, which is a very successful VC group that was able to raise a fairly significant amount of capital from the Harvards and the Stanfords and Yales of the world. So we have seen a few more kind of institutional type investors like the endowments and foundations kind of dip their toe in the space. From what we've been able to surmise thus far, the vast majority of that has been more on the kind of less liquid side of the spectrum. And I think maybe to Rob's point around sort of this whole notion of discovery and education, what have you, I think it's probably easier for these professional investors to kind of think about this as an innovative new technology, right? And so where do they have a budget for that in the context of their broader asset allocation? It's in the VC bucket, right? So it's kind of easier for them to perform that calculus in their own minds and carve off, a couple % of the portfolio just to kind of see how this goes. We operate on the complete opposite side of the spectrum, which we think there's still plenty of opportunity there as well to kind of complement that less liquid approach. But on that side of the spectrum, there just really hasn't been much activity yet. So it's all, in our minds, it's all white space.
It's interesting that the institutions have to kind of allocate it into a VC bucket or something that already exists. I mean, I think it was really noteworthy with the MicroStrategy. I'm sure you guys saw the Michael Saylor MicroStrategy transaction where, and for those who don't know it, MicroStrategy is a publicly traded NASDAQ company, a couple billion market cap, and had 500 million in cash. And the CEO of that company, a guy named Michael Saylor, publicly came out over the last couple weeks and said, we've allocated almost all of it, 425 million to Bitcoin. So we bought 38,000 odd Bitcoin. That, I think, is the leading edge of what we're likely to see more of. And it makes more sense to me than trying to, shoehorn it into a VC bucket, notwithstanding, we know how that kind of process works. People have their buckets, they have their processes, and they may not have room for an asset class that they're still trying to figure out if it exists or not.
Yeah, that makes sense. There's a lot of legacy frameworks of how to allocate capital that can embrace gold because it has this 5,000-year history. But the new entrant in the field, the so-called digital gold, will take some time for the acceptance. What do you think the news of guys like Paul Tudor Jones coming out publicly and embracing the asset class as a huge opportunity, and Novogratz, some of these guys that have made and earned their wings in the global macro hedge fund space? What does that do for the space?
I'm happy to jump on this, Matt, if you...
Sure.
I think it's huge. I think it's the leading edge of what we're going to just see, kind of a wave behind that. Yeah, I mean, guys like Paul Tudor Jones are very respected, successful macro guys. And when they come out, even though he did it through futures and maybe not the purest way that, Bitcoiners might want, recognizing the value of Bitcoin in a portfolio and the asymmetric returns, that's a big endorsement. And I think that gives social proof to other participants, especially other institutional managers. So, I mean, there's a lot of chatter about Ray Dalio because he's basically makes a complete argument for Bitcoin, except that he doesn't advocate for Bitcoin, right? And people will talk about Elon Musk, they'll talk about the treasury of Apple, and a lot of this stuff is early, but it paves the way. This stuff paves the way. Similarly with the PayPal announcement, right? Like now you've just got a major institution endorsing it as a business, and that brings legitimacy. Apart from just the infrastructure that it brings, and potentially the wave of buying and the price signal that quite possibly will issue. Yeah. So, and we're seeing these kind of things happen faster and faster, right? You've got last week you've got Mike Saylor and MicroStrategy. On the week before it was Paul Tudor Jones. Now it's PayPal. Now PayPal's talking about buying BitGo. Coinbase is going to IPO, right? So there's a stack of news, and we could go on and on about kind of all the things that are happening around it. Kraken be getting a bank license. I mean, there's a whole bunch of things that are really tying it to paradigms that people understand, and that is very helpful.
Yeah, if I just add a couple of thoughts there, I think it's been interesting. Some of the earlier movers in terms of professional money managers have obviously come from the macro side of the spectrum, right? Paul Tudor Jones, obviously being probably the most high profile and most recent in terms of the big splash in the space. But guys like Novo, guys like Dan Moorhead at Pantera. Dan Tapiero as well, who's been active in the space. It's sort of, to me, it makes sense that macro practitioners would gravitate towards this space. There's obviously the macroeconomic component of it in terms of, we have this emergent store of value that is literally just kind of taking shape by the day, and the potential inflationary protection elements associated with this finite resource. And I think that's what Paul Tudor Jones has focused on in his letters and so forth. So, but there's also this notion of asymmetry, right? And there's been a number of pieces. I think Fidelity was the most recent one to publish an analysis around just take your typical 60-40 portfolio and you carve off some percentage to Bitcoin, and notwithstanding the fact that Bitcoin in absolute return terms is a highly volatile asset, right? And is therefore quite risky in traditional metrics. Via diversification effects, it actually helps to improve the risk-adjusted returns of a portfolio, right? And I think they came up with the optimal amount was somewhere like 3 or 4% carved off to Bitcoin. So that's all well and good. And that case has been made a number of times. Fidelity was just the most recent one to publish something along those lines. But you haven't, up to this point at least, it's been mostly an academic exercise, right? Institutions haven't really kind of followed suit and said, okay, well, that makes great sense. I'm therefore going to allocate 2 to 3% of my book to Bitcoin. And the reason for that, in my mind at least, is thinking as an allocator and thinking about how allocators make decisions. The idea of this asymmetric risk return profile where you could make 10 times your money or you could lose, probably not 100%. I'm not convinced Bitcoin could ever go to zero. I think there's too many believers out there in the world. There'll always be a bid. But you could lose, as we saw in 2018, you could lose 70, 75%, right? So if you think about it in the context of an allocator, that's a big ask, right? To be able to, even if the theoretical upside is 10 times, you still need to entertain the notion that you could be down 75% mark to market.
Career risk. That's
really hard. There's massive career risk and there's massive blame aversion. And I understand all of it, as Zeckhauser refers to it as, I get it. But for the macro guys, asymmetry is what they do, right? They lick their chops at the notion of this stuff. So it makes total sense to me that the macro guys are getting involved in allocating to the space. And frankly, in my mind, Paul Tudor Jones was by far the most bullish development from a pure asset allocation perspective. I actually have a contrarian view on MicroStrategy where I think it was not a bullish development at all. We can talk about that if you'd like, but I think Paul Tudor Jones for sure, not just allocating to the space, but just his walking through his thought process, right? And helping people understand this is how we view this asset as a potential hedge against what he called the great monetary inflation. But my own caveat to all of this is all well and good, but I think the other thing that's potentially holding us back somewhat is this all still remains purely theoretical in nature, right? Because Bitcoin's been around really since so it's been around the better part of 10 years now, right? And we haven't really seen it tested in a period of inflation, right? Or hyperinflation. So we don't really know how it would perform in that scenario. There's plenty of reasons to believe that it would perform well for all the obvious reasons that folks have spoken and written about. But we don't know. So it's contemplating theoretical future states of the world. First of all, that inflation is going to come back in any form, which I think plenty of people will debate. But also, in the event inflation does return, Bitcoin will actually serve as a hedge, which, again, I appreciate the sort of academic approach to it and why people would believe that, but we don't really know yet, which is, I think, something else that's probably holding some people back.